All right, guys. So today's session is going to do Trader Spotlight interview with Dan S. I'll introduce him in a second. But today, what's the date? 28th, 2015. We had something I'd want to cover. If we were meeting together like we are in a virtual prop firm and in a conference room, right? Everybody should assume that you're, in a room and around a conference table. What happened today is what we would go over. If you go back on the 20th of April, if you guys are watching on recording, we had a pretty good move lower about a half hour after the 8:30 Central Time open in the S&Ps. Well, what happened was, and let me go to a pen, two things. There was a weaker consumer confidence number that came out at the top of the hour, right? But then 8 minutes after the top of the hour, the first release that hit the wire, we got in a timely fashion, was that Iran had seized a U.S. vessel, right? That was it. That's all that came out. So there's a lot of room for interpretation when that happens. And markets are always going to assume the worst, especially at first. You got to know that as a trader who's reacting diligently. So if the market, and it was, trades around 96 even. So if you look back at your charts at 9:08 Central Time on the 28th of April, you'll see 96 evens roughly were trading when this was released or hit the wire. The market eventually went from 96 even all the way down to like 88 quarter. And that's a pretty good, if I could write, a pretty good sell-off of about 8 points in a pretty short period of time. Reactionary-wise, I was able to get short once or twice playing it from that side of the market. Then we had someone say, it was a great question, and it was by Bob, do you look to sell some upside resistance? And I says, no. You don't want to do that because we could come up almost as fast as we went down, or we could take back that entire weakness if they start to diffuse the situation, and it's not as bad as they thought, and they overreach it, or they overdo the downside. So you don't want to get short unless it continued to drop across that the story was worsening, right? And the story was developing to become more and more bearish. Well, it wasn't. So it just climbed up and it got back to where we started around 95, 96. At which point another follow-up came, and that was that I believe it was that I think it was Iran confirmed. It was another semi-bearish, what could have been a semi-bearish number, or not number, point of this event, right? Or comment, or tape bomb as we call it, that dropped down the wire around 96 even. And I got short, but the market really didn't go. It just kind of like trickled lower and came back, and I got out for a very small winner and scratched them all. Or I might have scratched the whole thing, I don't remember. But I knew that if it can't go down, it probably has discounted this story and it's starting to diffuse itself. Sure enough, there was a level with a big order resting, and I can't remember the price. It might have been 96 even, that the market kept testing, and then once they got through it, they went 4 or 5 ticks pretty quick. And now the upside gradually became the right side, right into an hour, hour and a half later, where we're a good 10 points above 96 even. The story then continued to diffuse where it wasn't a U.S. flagship and so on and so forth. But big difference between what the story was here and what the story and reaction was here, and then what it became as you followed the progression of an event like that and how the market reacts. And then we had talked about how a lot of longs might have been shook out because of that extension with this story all the way down to 88 quarter. You shake out even more longs, so it's maybe easier to go up. I think George made that comment in the trading room. So the path of least resistance on even a swing trade and from a spring or swing trader perspective was upside. You got to know how to react to these stories. First thing is It's really important to put yourself in front of sources that's going to get you that information in a timely fashion, or you don't have a shot. Then secondly, you got to know what to do with it. Then you got to know what the market does with it. I sold 95 halves. If it didn't go pretty quickly, I would have had to get out, would have had to gotten out, because we already had sold off from like '02 to 96. So there's a thought, well, did we sell off because the smarter money got this news sooner? And I thought, this is still bearish enough to send us lower. And it did. But when it comes all the way back up to where we started, hangs around, can't return lower on what could be another bearish add-on comment to the story, then you start to put your horns on, or at least declaw your bearish pause. But you got to follow that cadence or follow that progression that way, because you'll start reacting instead of thinking. Question from one, do you think the market would have eventually gone there without the story? No, I don't think so. I can't be sure of that. I don't think 88 quarters would have printed today if that story didn't come out. I think we would have had a little shakeout after consumer confidence, and then we would have ran from overnight low that would have been rejected, and we would have ran up to where we are now. Do I know that for sure? Of course not, but that would have been my guess. That move created more selling and lower prices than otherwise would have been achieved if that story didn't break. That's why good stories, good events create volatility, which creates opportunity. So I just thought it was important to kind of review that for those that either aren't in the room or weren't in the room today, and those watching this eventually on a recording could go back and look at the charts and what it looked like. We did a few weeks ago a class on economic numbers and events. We actually had one. You're going to have more. Your whole point of a career is to have a long career of thousands and thousands of trades. You should have hundreds of events attached to it, rumors being dispelled, and everything else in between. That's what you want. Again, it's tough to root for people that have despair for you to make money, but if it's going to happen, you might as well have yourself in a position to profit from it. I mean, you're in this business, you put yourself in front of charts and order books and classes like this, you got to know what to do with volatility created by events. You got to react to them. We knew what to do on 9/11. We knew what to do during the financial crisis that went through nearly 2 years of 07-08. We knew what to do in 2011 in September and August of that year when the debt ceiling and the U.S. credit was downgraded and all that other stuff. That's what you live for when you trade, know what to do. So let's roll out of that and jump in with Dan. First, let me test Dan's mic. Sit back, and again, this is not, in a sense, it's a content-driven class, because with these previous spotlight interviews we've done, there's always been something that has turned over a stone for certain people. Let me find Dan here on the list. Dan, I'm just going to enable your mic and do a sound check. Dan, do you hear me?
Yeah, I'm here. Are you there?
You sound good, yeah.
Okay.
Where are you from, first of all, Dan? I forgot. Carolinas?
I live out. No, I live outside Washington, D.C. in Virginia.
Oh, that's right. Okay, all right. All right, so give me 1 second, Dan, and then we'll get started.
Sure.
All right, I'm back. Just like you guys have I've probably done a couple dozen, not that many, a dozen and a half interviews with people. Those that have done it know this to be true. They're not scripted. I don't go over questions. I don't even really know what I want to ask. Just a brief history on Dan. He's been in the room for about a year, Dan, 12 months or so.
Little over a year.
And then when the Edge got rolled out, he jumped into that to have access to that content in these weekly classes. What were you trading before you came into the room, Dan?
I was trading the ES and crude oil and losing money.
How long?
Off and on for a few years. I first started trading when my broker started carrying futures and said, you should check this out. And the first day I made some money with it and thought that was the easiest thing, in the world because the leverage is so high. I made more money than I'd made in one day and spent the next 2.5 years chasing that money and blew up 2 accounts doing it.
Yeah, I mean, and what's interesting about Dan is he's an appraiser, right?
Right.
So he's a real estate appraiser is what you do?
Yeah. Uh-huh.
So it's what's unique about that job, and I often use it in my analogies, is that it's all straight compare contrast, right? That's what you use as your main tool to value real estate, right?
That's right.
So did you find that it was easier to catch on to the whole market relationship concept with trading when you got introduced to me?
I'll never forget it. It took 1 minute. I spent all those years knowing that I'm a big believer that one person can do, another person can do. And I knew there were people like you out there. I knew there were prop firms, and there were people that were making money every day doing this. I just wasn't one of them, and I knew I was missing something. And I think if all the education people out there said what you have said, which is, you think you're going to compete with me and I've been doing this 15 years and you're not going to pay for any education, you're kidding yourself. Because, it took until I got a professional education with you that I'll never forget the day. Not everybody here knows this, but I'm mostly in the car during peak hours, trading from a laptop and going from house to house. And that was the first time you talked about market correlation with the bonds. And I typed in, what is the correlation between the ES and the ZB, and you told me. And that was the light going off right there.
So all the good things that you had learned or knew kind of fell into place with that.
Right. It became so much easier to compare and contrast, to figure out. Now I knew why things were happening instead of just looking at colored lights on a screen.
And the randomness, right, that otherwise existed.
It completely strips away the randomness. I know that there are people that are new to it, or if they can't go back and see a yin-yang movement between the ES and the ZB or other correlated markets, then they don't believe in it. Nothing happens every time because there's lots of people that are involved in movement of the securities. But if you just look at it on a wholesale level, I mean, it's the biggest edge that there is.
And the faster markets move, I'll add, the better that edge is.
Right.
Because, go ahead.
My theory on that is it's also the same reason that the correlation takes place, greatest during the early market hours. It's when the professionals are trading.
Well, yeah, and to keep them in line. Now, there are automated ARBs that keep them so in line that they don't provide an edge.
Yeah.
But when there's volatility, those ARBs either back off or they're so fast, even when an FOMC releases a statement, that you got to get the best edges when you can get a follow the leader type of environment. Then order flow would be second. I could trade with a really good relationship or corollary, and I think you can too, with the uniqueness that you have with limited information you have on your laptop, being you're always in transition, but the best edge is just follow the leader. I don't need order flow if a relationship was working really well. I just would trade direction.
That's more or less what I'm doing. I will scale into a position as well as scale out because I don't have perfect timing to sit there and watch it, too closely. And the market play-by-play is you and George. I mean, without that, I would have a very difficult time trading because knowing what's happening in the ES and the other broader markets, I don't need to stare at the screen. All I need to do is listen, and that keeps me in the play. I wish the room went all day.
You're not looking at too many things then.
No,
just good. You're paring it down. What's your main market, Dan?
Just the ZB.
And that's all you trade, the bonds?
Every once in a while, when it gets very dry, I'll trade the ES for just scalps, just to keep me interested. But for the most part, I just stick with the bonds.
Yeah, no, after you joined the room a few months, you had sent me a gift card to show your appreciation because I
That's
felt
right.
I remember that, and because it was like, who is this from? Or you had asked an address, and it was like
Right.
that light bulb moment must have really went off, and it's a guy that once I found out you're an appraiser, it dawned on me, well, that's a guy that would sell himself or would buy quickly into. Why wouldn't market relationships work? We're
Right.
valuing price for crying out loud. It's what I
Well,
do
just
for a living.
if you go back and look at the track record of where I was to where I am now, um, not every day is a winning day. That's just the way it is. And that's the other thing that is I've gotten much better at is learning. You say, don't trade like you, but certainly cut your losers like Anthony does, and you'll be happier in the long run. That's for sure.
What size are you trading into bonds, Dan, if you don't mind me asking?
I usually scale in with 5 in my first, and then another 5, and I typically don't go above or below that. And since listening to Woj, I've actually been doing some spread trading, but I'm mostly an outright. The gift card incident was right before an FOMC meeting. This is not a chance I would take again, but I was on a hot streak back then, and I was trading a retirement account that I can't touch it for another 25 years, so I was a little bit more risky with it, and I was holding well more than 20 contracts when that FOMC came through, and I was short, and the bottom dropped out, and you got a gift card.
Well, it was that's that you had taken the position like a longer term. Was it like a longer term?
A couple, probably 12 to 24 hours before, just because it had been moving higher and higher, which, like, I've watched pre-FOMC, and you'll see, like, starting right now is a good time to just watch the correlation between the bonds and the ES start to come more together than apart until 2 o'clock tomorrow, and for a little while afterwards. And oftentimes you'll see people piling into the bonds, just waiting to see what happens. And so I just bought a little bit more and a little bit more, and was right before before that announcement. I was just starting to get in the green overall with the position when, it dropped like, I want to say 18 ticks, like instantaneously. And, I was still kind of new at it. I just closed instantly. I
Well,
should have hung a little bit longer, but.
well, that's a good problem to have, and it
Right.
always dawns on me because there'll be people listening this in the future on a recording, and they might be newer than a lot of the group that we have in here today. The biggest things to watch and most important things to watch in this business, and maybe other businesses too, are sometimes the last things people ever become exposed to of 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 this business. Like, why did the market do that? And it's like, listen, if you were in a prop firm, you would know why the market did that, whether it was an FOMC reaction or an event like this morning with that Iranian news. That wasn't a huge 20, 30 point move, but it was a good move. You would know why. If you were in a professional environment on day one, you would know the whys markets did what they did when they moved a lot. But in the retail environment, if they ever get to it, it's one of the last pieces that they ever try to learn or know that they need to learn. And they really, and this is, again, I keep going over this is good for those like us who know what we're doing, is the money comes from those who don't know what they're doing. And these guys will take one market and they'll profile the SHIT out of it, and they're never aware of any other market. That's it. They're not talking about the NASDAQ, the Russell, the bonds, the Euro stocks, anything. And it's so opposite in a professional office. It's sickening. So I think that at least you are aware of what's going on in other markets, whether you're listening to people that have got their eyes and ears on it, or it's your own eyes and ears. Are you trading? How many trades a day would you say you take then, Dan?
Probably 3.
3 trades, and so you're in with 5 or 10 contracts?
Yeah, I sometimes I got started today at 4. After listening to Woj do his commentary, I've started getting up and spending an hour between 3:30 and 4:30 looking at the European Open, and can sometimes get a trade off there, and then typically I'm up at 6, make another one, and then go from there. Sometimes it's more. It just depends. Like today, bonds are down over a handle, and just watching them, you just keep saying they can't go down again. They do, but I'm like, I don't like to sell through a low or buy through a high. So for me, the bonds can get played out pretty quick during the day, and oftentimes I'm done. Once noon hits, even if I still feel like there's something out there, I just remember that the later it gets, the less correlation that you're going to see. Not always, but I mean when professionals are less in the market, you're going to see things happen that maybe shouldn't happen. I've had it happen to me enough after 12 or 1 o'clock that I tend to stay away from it.
Yeah, there's typically less opportunity, but the bonds are a good market because they're 31.25 a tick,
Yep.
U.S. dollars. So trading 4, 5, 10 contracts in the bonds is bigger size than trading that size in the ES. I've always said it's a truer market because the bonds have one underlying cash instrument, and that's the cash bonds. Obviously, they're affected by a lot of different other treasury instruments and expirations, but you got the ES that's affected by 500 stocks and everything else it's going to have to average in, plus all the retail influence that's in the ES, which creates a little whipsaw. But if you know that when you're analyzing the S&P, then you kind of find and really, really focus on where guys are wrong, especially retail guys. What kind of trade do you have like a specific setup in the bonds that's just like a go-to trade, or I mean, what would you call yourself? A momentum trader in the bonds? You like to sell pullbacks?
I like to
tracements?
I like to get with the trend and find pullbacks. I took George's chart, his volume or his delta divergence. Yeah, and I changed it to be a delta accord bar and added the VWAP on there. It's taken from your original chart. I'm not the greatest with technology, so I just muddle with it. But it's got a nice VWAP on there. Like at 10 o'clock today was a perfect example. We're in a downtrend in the bonds, and the ES is moving up. And there's a pullback in the bonds right to the VWAP. And now I've got those delta bars counting, in the direction of the security. And it's a complete red bar there. If you can see it, it's just a no-brainer that the thing is just going to bounce right off of that VWAP and head down, and it did. And as long as that meter at the bottom, which is showing divergence, it just stays red for about the next, I don't know if it moved like 8 or 10 points. I'm conservative. I trade, I guess, larger size, but I don't hang around very long. I scale at 1 tick, I scale at 2 ticks, and I might keep a little piece beyond that, but typically I don't, because 31.25 is a big tick, and you make 1 to 2 ticks on decent size, you can make good money and not worry about it going the other way on you.
What is your average? Where do you get nervous, loss-wise, or with it against you?
Three ticks, and I'll try. I give it 3, maybe 4. It depends on exactly what's happening, because the bonds sometimes will react pretty instantaneously, and sometimes they won't, because it's a thinner market. You can see, especially with the footprint, you can see bigger players come in and buoy something that should have, in your opinion, or in my opinion, should have made a turn right there. I'm really trying to catch turns, and you'll see a turn start to happen, then you'll see suddenly 100 contracts go down, and it's headed in the other direction, and that's somebody with deeper pockets, but that's all it takes in the bonds to move things around a little bit. So especially with that bigger tick, you have to admit to yourself, that's the end of that trade. And I've gotten much better about it, because the hesitation is there, the anxiety of money loss, but I go back and I try to think about the ones that took place over the past week, and I can't even remember them. They fade much quicker.
That's a good way to. That's actually a really good point. Is when you get anxiety about worrying that the next trade might be a loser, so you hesitate. Think about the past, how you forget about losers. Who cares? Sure. And then that's what this one will be.
They just fade, and that's something You know, even when the computers are off and I'm out in the field or I'm typing reports afterwards, that's what I focus on mostly, is not entries and exits, but bad habits versus good habits. You know, self-pep talks about, you know, it's losers are losers, and you can't even remember the real, you know, the one that happened last week or 2 weeks ago, because it's just
It's a
part of,
trait. It's
right.
not important. It's a
That's
trait.
right.
If it's
That's
important, you
exactly.
remember it, and now you're down the wrong path to begin to begin the whole process. So your average loser is slightly bigger than your average winner, but you're having more winners.
Right, because you know, 1 to 2 ticks is good enough for me with my size. And if you look at a chart of the bonds, like when it makes a move, it doesn't move 1 or 2 ticks. It typically moves like 5, sometimes 10. So
Right.
one of the things I used to think about, especially when you talk about people that you know, they think you get out too soon, you're taking 2 ticks on. You know, if you're making a trade and there's more left on the bone afterwards, you're just picking good spots. And that's something I plan on working on, is leaving not a lot more, but a little bit more with maybe a stop on it to take advantage of, you know, getting into the good positions. But if that's your problem, like it is with me sometimes, that's a good problem to have.
Well, yeah, and you always should be working on something. Every professional is working on something as they're succeeding, and
Yeah.
that is for you. It's a great problem to have.
The
Um, Go ahead.
the other biggest tip that you gave me was stop focusing on losers and start keeping track of your winners, because although the occurrences aren't random, they're so varied. You know, looking at what happened on that dome, you've done it so often, you can recite it. Every instance that happens, you've seen it before many times, and I haven't. So I do go back and look at my winners, because until you can have those memorized, you know, you're not truly a professional, because you should be taking advantage of them as they happen, not thinking like, is this the same as what happened before? Look at winners, because they do repeat themselves, and you'll be taking advantage of them more often than letting them go by.
Yeah, to know what you're looking for. That's part of where that trading cabinet idea
Yeah.
came from, to help people know what it looks like. You know, what does it look like when someone's lying? It would be a great skill set to have if you're a detective, right? And they run
Uh-huh.
them through that, I'm sure, with their training. Your skill set is comparing like properties. You could drive to How long have you been doing that work, appraisal work?
Almost 15 years now.
So you could go to a house and draw the blueprint by walking through it, and write up a report with your toes, right?
Yep.
It's pretty easy to kind of get where that and not that you're inaccurately appraising that house. You just know what to look for, right? You pull it
Right.
up, bam, 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 bam. This is what this price or this house is worth. You wouldn't be doing it for 15 years if you
Right.
weren't
That is
accurate.
most of the cases. There are very
Now,
few mysteries left in the real estate world.
yeah, it's black and white, and so it's like the other, I don't want to say edge for appraising would be that banks would use, not necessarily you, is mortgage apps. That would be order flow, I think, in approving a borrower. Just how many people are applying for loans. That's just a supply and demand thing. You know, they could kind of a longer term gauge on what prices are doing, because they want to manage the risk against a downturn in housing prices. And so they'd first do it by your report. Is the house worth what the buyer and seller agreed? And then the next is, you know, are other banks approving mortgage applications too hot, too cold, the overall? That would be order flow as it is in our business. But let me add one more thing that you're talking about, that your business is about. And that is, you go out and you compare and you contrast other houses to find value in the one you're working on. But that goes to show you, just because a buyer and seller agreed on price doesn't mean crap. Correct?
Right. I mean, there's an unwritten rule in the appraisal world where, you know, you need your sale prices to come in, because that is what sets market value. But at the same time, there are shenanigans being pulled with closing costs and personal property and people that know each other, as well as people just get it wrong. They get a contract on a house that's $50,000 more than any other townhouse in the neighborhood without any reason for it. And the report basically says, here's the data from the neighborhood. Lender, you make your decision, but this is the way I see it. And certainly they have every right to make a loan if they want to or not.
So you see that, what's the saying? You want your sales prices to come in?
Well, your sales contracts you should not be too far off from the sale price, because you have, in most cases, a willing party that wants to buy and a willing party that wants to sell, and that is what establishes market value for real estate. And maybe a couple times a year, I'll have a situation where the price is dramatically different from the contract price, and almost always it's to the low side, because the contract price is to the low side because it's a for sale by owner, and the guy figures he's saving on the commish, and he sells his house too cheap.
He pukes it, yeah, or it's a divorce or something.
Right, all the time.
So that's interesting, because it shows you you want the natural market forces to set price, and they do normally, correct?
They do, right, because most people don't go buy a house and just look at one. They look at 5 to 10, and
yes,
they compare and contrast, and then they make their decision.
And that's why you can't always say that a buyer and seller agree at price in the S&Ps, that there's value there. It gets expensive and it gets cheap, because it's just like Dan's business, only it's happening more often because there's more buyers and sellers that are cranking and prices are dragging. There's a lot more external factors that are driving around an index and a stock than an entire housing market typically. So while there isn't a ton of opportunities, just like Dan said, where his appraisal is outside the sales price, which means there's someone got it cheap or someone sold it expensive. There are times, and that's where the opportunities are. They could be outliers like 88 quarters happen to be, or maybe 775s are right now is the high, or just inside a range where there's just moments of people selling it cheap, buying it expensive, and stuck and got to go the other way. But it's a really good black and white parallel business to trading, and 90%, maybe more, of people that come in to the room and to the edge are guys doing other things or have done other things. And so it's hard to take what you guys have done that has maybe made you successful in another business and apply it exactly to trading, because it doesn't work. Sometimes it's opposite principles that work to be a professional trader than it took to be a professional insurance salesman or whatever. But with what Dan's job has been, that one principle, he's dealing with buyers, sellers, and he's dealing with comparing and contrasting, and I think that's what flicked or turned the light bulb on for you sooner rather than later. Have you so you've been with me how long? A year?
Yeah, it was I quit trading for about a year and a half after blowing up my second account because I didn't know what I was doing, and we had a baby, and I was like, I didn't have time for it, and I decided to give really one more chance to trading, because I had always been successful trading stocks, which are less lucrative, but been doing that for a long time, and I knew if I got back into it, I was going to give Market Delta a chance, because it's something I had looked at before I decided to hang it up before the baby was born. Because listening to Trevor's webinars, he doesn't sound like a salesperson. To me, he sounded like a scientist, like somebody that is just explaining the way things work. So when I got the demo download, there was now a trading room, which there had not been a few years before that. And I took a demo, and then you called me on a Sunday night, and I was shocked. And we talked for a little while, and I joined from there. I know nobody listening to this is like on the fence about joining the room, but if you're going to trade commodities and you're not going to join a room that costs the cost of Starbucks a day, I don't understand where that mindset
right.
is.
Well, and it's not their fault. And people listening in here, most of them are in the room. It's almost they don't know what it is, right? They get confused. It's
Yeah.
not like they don't see the value; they don't understand the value. But when you understand it, it's the no-brainer that you've made it out to be and everybody else has made it out to be. Trevor, by the way, is a farmer with brains, is what I tell him, and we laugh about it. But what he's got is he grew up in Ohio, and farmers got a really incredible work ethic. And then when you put those who have brains, I mean, really do some powerful things, and that's him. So when you marry that, that's why I do things with him, because he's a down-to-earth, honest guy that's smart with a really, really strong work ethic and vision, right? Vision, a farmer with vision, to me is pretty pioneer-esque.
Yeah.
Let me ask a couple questions from the group, Dan,
Sure.
if you don't mind. What's
Go
your
ahead.
normal hold time in your trades?
Uh, when it goes my way right away, it can be over in a minute and a half. But sometimes, especially if it's a little bit later in the morning or early afternoon, um, if I'm staying within my risk tolerance, I'll wait and see what happens. I mean, the bonds, for the most part, don't don't go flying off the handle, which is one of the reasons why I like trading them. It does happen, but not that often. And like you, I don't use a set stop. I'm when I'm in a trade, I'm watching it. For the most part, if I have to get out of the car for something, I'll either close out of the trade or scale back, to just a couple of contracts. But in most cases, it's less than 10 minutes.
What,
Now,
Brad?
also,
Go ahead. I'm sorry.
sorry, I am doing some spread trading, and spread trading I'll even do overnight, because those you're looking for a wider disparity to take place before you can take the small profit that you're looking for. But as an outright, not that long.
Another question you answered about scaling out. You scale out 1, 2, and sometimes you hold a piece for a longer chunk of the move.
Yeah.
Typically, those are your winners.
hmm
Another good question Brad
And
has. Go ahead.
well, if you're comparing it to the ES, it's like holding for 3 and 6. I mean,
Yes,
almost
right.
to the couple
Tick.
steps then.
When I put bond trades on, I try to get a tick on the first part. I really, because it's a good tick,
Yeah.
and it really allows me to stay into the balance of the trade. Um,
Sure.
but here's a good question. What 1 or 2 ideas, concepts that you learned from me has had the most impact in your trading? The ones that have made the most sense, or the aha moments where you finally could say, I kind of got it?
The primary aha moment was correlation, where after you said in the room that one day, it was over a year ago. Oh, sorry, there's a 5-year note auction in 16 minutes, everybody. About the ZB, I was late to that appointment that morning because I pulled over and I'm just going back and forth between charts and I'm saying, holy S, this guy's right. This is real. And the other thing, there's more than I can count, but I also can recall sitting in front of a screen, watching something happen at 8:30 or at 9 o'clock and wondering what the hell just happened there. And now I know what to look for, that you need to have an economic calendar and a news source to understand that these things, that's how little I knew about the futures market before coming to your room. Just those 2 things would take somebody who doesn't know what they're doing and turn them into somebody that knows more than others quickly. And
Yes. Yeah.
and then being able to, for me, a third thing has been being able to use the market delta charts, the footprint, to see volume imbalances in a way that like I know you don't like a lot of indicators, and I don't use indicators, but I use a lot of colors on the chart because I'm glancing sometimes while I'm driving to get a gauge of what's happening. But market delta charts have also been pretty invaluable.
Yeah, so I think that I would say that's common. It's a correlation. I got to add this to people is if you think that everybody knows that, why would it be an edge? You'd be wrong. Because I used to say that. Like when not saying something in the room very early on because I assumed people knew that. Man, was I wrong in hosting a room early on. Just saying what a prop firm was, assuming people knew that, they didn't. So if you think that most people who try to trade know what an economic calendar, what those numbers are, like that class we did a few weeks ago, no, they're not even close. They're asking themselves why all the time. And that's when they say why, that means opportunity for guys who know why, and it means you don't know what you're doing the more times you say why. You're going to say why, but if you say it a lot, especially on big moves, you don't know what you're doing. So don't ever think or take a piece of information for granted. That's obvious. Everybody would know that. I used to think the same. They don't. They don't know it. They're the ones getting picked off, creating the opportunity for those who do know what is going on. And there's more and more retail traders coming into this business, I think, than ever before over the next 3 to 5 years. And Nod's got a question for both of us about, with the bonds being a corollary, how are we gauging whether it's a driver the same direction or opposite? For me, it's central bank. If the central bank is hawkish or dovish and that's creating the market movements, bonds and stocks will move the same way. Generally, it's an asset allocation relationship. People get out of stocks and into bonds, especially when there's fear. I didn't get that bearish in stocks, like the bottom was going to really fall out in that event today, because bonds didn't really spike as a flight to quality, and I mentioned that in the room. So they're inverted historically, stocks against bonds, but not always. That's why you got to add more corollaries to your tool chest than just stocks versus bonds. When they're working, great, fantastic. Right after an FOMC statement, especially if it catches the market a little off guard with what the statement says, I like bonds leading stocks. Because if bonds go up, that means they don't think that they'll raise rates. Stocks like that too. So they'll tend to follow the short end and the 30-year and things like that. Would you add anything different?
No, it's almost textbook. The way you'll see them come together over the next few hours, and then sometimes a little bit longer afterwards. What I found that, like, outside of let's just say outside of the entire week of FOMC, if you're looking at bonds because you want to trade them, and you see moves take place that are counter what's happening in the ES or so I'll look at ES and NQ together because they often go hand in hand. When you see that take place, you're seeing strong conviction in the bonds, and don't discount that. There are reasons for things to happen in the 30-year bond that don't have anything to do with the ES, and they will make moves because of that. If there's an auction, like yesterday, there was a 2-year auction, and it sent the 30-year, was about a 5-minute lag, and then it sent the 30-year up for the rest of the day because it was a positive 2-year auction. So people, they start to see some run there, and they get behind it, and it didn't really, it didn't correlate for the rest of the day. So there was a reason behind it. Then, when you see that happen, just expect that, it may continue for a little while because something even stronger than just that market correlation is taking place.
Yeah, no, that's a good point. And we'll do in the future a how to trade the auction for Treasury traders, whether it's a 2-year note auction, you're a bond trader, or a 30-year bond auction, you're a short-end trader. Kind of have Woj go through that. Very often it doesn't affect stocks, but like Dan said, it does affect correlations. I got another question, and it's a good one. Well, let me ask you this. So 12 months you've been in the room.
Yeah.
And you felt like you turned the corner pretty close to a couple months into the room?
Yeah.
And then why did you decide to do the edge several months later?
It made absolute sense to me. The small investment I made into the trading room turned into the best investment I ever made in my life. I knew that the edge was costly, sure, but based on what I'd earned in the bonds over the past year, it wasn't even worth thinking about. Also, if I learn one thing, just one thing, in the edge course, I'll make money off of it. I'll get my money back. And I sent you a note. This was a couple of weeks ago after Woj did his first thing. I did my first overnight spread trade. It was a little dicey, but it came through in the end, and ended up paying for half half the edge right there. So
Yeah, something that he added. All right, that's good rationale. Plus, it's like it's the fact that it's not. If it was just a product, here you go, you probably would have assumed I kind of know that. It's these ongoing classes and connectivity. It's where the true value, not the true, but the big value is the ongoing value.
sure, I mean even every person that speaks, in the edge, even if it has nothing to do with exactly what I trade, you can get something out of it.
Yeah, right. Even these interviews, I'm telling you, like the thing you said about, and you didn't mean to say it, or wasn't a point you were probably thinking of saying, but you had said, when you're anxious about worrying about taking a loser, you think about how irrelevant and unimportant that last loser you took last week. You don't even remember it. It faded
Right.
pretty quickly.
Yep.
Give me 1 second. Let me ask you these last couple questions. Let
Sure.
me get a drink of water real quick. These markets are catching a bid as we're going through it. All right, so what obstacles are you still there, Dan?
Yeah, I'm here.
All right. So what obstacles or challenges do you see going forward?
The same that I always have. I have execution anxiety, just like everybody else. Here a great example at 12:25 today. The ES starts moving up. If anybody's looking at charts, and the bonds start to move down from the 26s. They're down to the 14s. I didn't take that trade. We were doing the webinar, but I'm looking at it, and because the thing's already down a handle, I just look at that and say, like, God, I can't get behind a trade like that when it's already on almost its dead lows. But I find myself in that position virtually every day, passing on a trade because I think I know what's going to happen, that it's going to fizzle, and it doesn't, and it's trying to I guess believe more in the process and engage in the process instead of just you got to pull the trigger. And one thing that gets me to pull the trigger is just hearing you say, like, you look for the situation you're looking for, and then you take a shot. And if it doesn't work, go on to the next one. I mean, you've got to have that mentality, or you'll never pull the trigger. And I find myself in that situation more than I should. And that's my biggest challenge. I guess everybody has the execution challenge.
It's an obstacle and a challenge we'll always have. They'll be less challenging in some periods and more challenging in other periods.
Yep.
Most people don't even recognize that as a challenge, but it's their challenge they never get over. You'll get over it some days, some weeks, some months, and then you're not, and you're stuck on it. And that's where community help of those that recognize, it's 15 years in this business. Yeah, I got that challenge. What do I say? My missed trades are my worst trades. Why do I say that? It's an executional challenge. It's why didn't I take that? Should have just went with an instinct there.
Mm-hmm.
You will get better at listening to your instincts and not your thoughts. If you listen to your thoughts, you're in trouble. If you're instinctively allowing your reaction to go from being in sync with what you know and how you value price, it's like you banging out your appraisal report. You're not going to miss something. You're going to, you're just succinct with what you're doing. When you're trading well, the challenge goes down. When you're trading poorly, the challenge and the obstacle goes up.
Yeah.
Another question, these are just could be challenges: psychology, family pressures, time pressures, financial pressures. Once you start making money, it becomes the challenge to execute. Um, Everybody in any business, success or not, could have external pressures for wanting to make more, or what's my next month's income going to be? And that's really case by case and subjective to that person. Some people deal with it better. What I always try to tell, this is a good time to say this, someone relying solely on their trading capital then doesn't seem like you are, which is a good position to be in, to be able to have a supplemental income from your trading. Um, those that are going to start relying on your trading income because you're realizing it, you got to live below your means, especially for a while. I've always been good at that because it takes the pressure of not knowing what your salary is going to be that year off. And I did that at an early age at the beginning of my career. I didn't go out and, buy everything I could buy with the money I was making. And it allowed me to just stay, where I could go several years without making money and still live the same lifestyle. That reduces the pressure a lot. All right, let me read some of the other part of his question. Hey, now that you've turned the corner in trading, Brad, do you see the potential to quit your day job, so to speak, and trade full time?
I don't know if I could ever do that. I mean, the pressure, I've turned the corner because I have more winners than losers, but not every day is a winning day.
Mm-hmm.
And when I go out and appraise houses, those are always a winning day. So
Yeah.
also, they're not home right now, but I like getting out of the house. I have a wife and kids.
Well, here's the thing with that. It's a tough, boat to jump on, and between the pier and the boat are far apart. If it was a pier that was next to the boat, you could just put one leg on and put your other leg on. You're on the boat, which is trading full time, fine. But it's often there's water in between the two.
Yep.
And if you make the jump, what Dan's going to be thinking, I guarantee, is I could have done 2 appraisals and made $600 today, and I got to make that trading, and now I'm just even. Well, that's the absolute wrong way to think, but I wouldn't blame him for thinking that. That's why it's a tough leap, because it's guaranteed money that he could bang out, and it's like he doesn't right. You don't dislike doing the appraisal stuff.
No, and I mean, my problem has been, before I became an appraiser, I was in the mortgage business for many years, so I have and always have had a built-in clientele from locally to large national and international lenders for all kinds of different things besides just mortgages. And I've been working 60 to 70 hours a week almost since day one. My goal with trading is to scale that back to a reasonable level where there's still the income from it, but that the rest of the income gets made up from trading, so I don't, so I'm not working until 9 o'clock every night. Like, it's spring right now, it's busier than usual. But yeah, I'm working until 9 o'clock every night just to keep up with demand. And
so you want to swap that side of your
correct
income stream out. That's
Yeah.
that's a smart plan. Ken says that it's amazing how similar all the histories are from everybody that has been interviewed or listening. The journeys, I think. I would think it was amazing, but after hearing enough of it, it's not. You know what I mean? It's not. It's you know what it's like, because you guys weren't from, let's say, geographically as fortunate as me. We would compare and contrast stories, and they're very similar with the prop guys, the original prop guys, and many of them where our journeys of how we got in the business were similar. Coming through the floor, I got a job from this guy, he got me on the floor, I checked his trades, got a job clerking, and then he backed me, put me in a pit, and then I found this, prop firm. Those stories are the same for a lot of people that have, going from a floor to a firm, right? But then you guys come into this business and you learn that it exists and then start off on a certain track first, it's often the wrong track. Like I've said to many of you, the marketers get their hooks into you first and start. It's like the hotel that's got the blinking lights, are the first one you want to stay at, but it's not always the best one to stay. And it's like, I used to not care when people beat up on other trading educators because I knew there's a lot of them, and I still know there's a lot of them. But I tell people there's a lot of bad everything in every business. It's not like, well, the only snake oil salesmen are trading educators in trading. Yeah, you're right. There's a lot of them. But there's a lot of snake oil salesmen in every business and walk of life. It's just magnified for people who have paid and not seen value, I paid 50%, 30% of my income for 7 years, and I'm not bitter about it. A lot more than people in this room might have gotten burned with previous education. Let me get rid of some of these questions we've already covered. Bob says not thinking about the losers is something that's just starting for him because that's all he used to ever think about. That's a big turn the corner moment. George said they just shook him out on that pop. I can't relate to the exact example feeling how much, or Josh says he could relate to that exact example of how much more could they sell it, and they slam it down more. I can't repeat what Tom says, but it's good. You ever see yourself quitting and going full-time, Dan?
Yeah, I mean, if things, I have like a 5-year plan to scale back on appraising, and I mean, I consider myself a full-time trader as it is. I've got multiple monitors right here now that I'm in my office now, so I've got 5 monitors. Makes it a lot easier, by the way, but you'd be surprised. I have more hesitation in front of multiple monitors than I do with the laptop just because I'm so used to it. But after, if I'm where I want to be 5 years from now, I plan on changing my appraisal firm to where I'm not appraising anything anymore, and there are people working for me doing, turning it into a bigger shop than it is to farm out the work. So there's still the income stream, but it's going to be having other people to do it, so I can be in front of, in front of a professional workstation, no matter where I go. If I go out of town, to vacation or whatever, I can still have both going on.
It's a good business plan. I mean, you're attacking both sides of it as a business. And that's another thing that traders that get into this business don't do is it's not a business. They think it's a game until they lose money. And then they're like, so you got to have a plan around it. You really do. You have to have a plan around, what you want to spend, what you want to invest, what you want to lose, what you want to risk. It'll make the whole process easier. And then as you turn the corner and see consistent profitability and not feel when you're having you're profitable, you don't feel lucky, right? Anymore.
No, that's something. Last spring when things just started to click, I was in front of a property and typing in on the screen in the room that like I feel like a professional trader now. Like I can see what's going to happen. I take a position, it happens. I knew why that was going to happen. When it doesn't happen, sometimes that happens, but just a lot of the anxiety kind of went away at that point because I could see the hypothesis and then the result, pretty quickly.
Yeah, it's not. Well, keep going back to it. It's not random,
Right.
or not as random as it once was. Your appraisal business or your appraising that you do, did it get bone dry in '09 and 10?
Well, back then I was doing a lot of work for some large nationwide lenders who then needed, starting at the end of '08, people like me to appraise all the foreclosures. So
Ah,
for me, it never really slowed down. I've always worked for the Department of Housing and Urban Development in some regard also, and still do. Their foreclosures never end. Um, so I know in 2009, the entire year, I didn't do one purchase inspection, not one. it was it was either
um,
a bare bones refinance or a foreclosure for an entire year, and things have that has obviously changed quite a bit. But you know, you talk about a little bit like being a detective. While I'm talking to you, I'm looking at the tax record of the inspection I had right before I got here, where the homeowner stated that they lived in the property, which had no furniture in it, and it was about 50 degrees inside. And their tax record shows where they really live, because that's where they get their tax bill. So that person's trying to get a interest rate that corresponds with being an owner-occupant when they are not.
Dan Koch.
It's kind of it burns me up. But when this thing goes belly up, if it ever does, the only person with E&O insurance and a license that was involved in the transaction that called it owner occupied is going to be me, and they will sue me if I don't tell them this is what I found. So I tell the lender this is the way I see it. Where do you want to go from here?
You turn the information that you have to them and be done with it.
They make their own decision. I mean, in most cases, I'm not going to go head-to-head with a homeowner who says, I swear I live here. And I'm going to say, I don't think you do. I'm just going to pass. You let somebody else go out and appraise it.
Yeah, no, that's a good way to put it. And when did housing prices bottom? 11?
Yeah, they started to turn around like in Washington, D.C., probably 10, and in the suburbs closer in 11, and then, from there, in a concentric ring outwards. If you live in the sticks, some say they haven't bottomed, and they're stagnant at best in the further out reaches from Washington.
And probably any main city is like that. The further
Yeah.
out you go, like Chicago has main or a vast suburban population where you could drive an hour, hour and a half straight west and still be in suburbs with
Mm-hmm.
everything else. You got to really drive pretty far out. So it's probably relative to what you're talking about. Did you know that in 11, would you been able to predict the bottom is probably in?
No, I wouldn't.
Well,
I wouldn't have guessed it at that point, just because what we had seen was getting worse and worse. And to be honest, what really happened was the government got together with people from Bank of America and Wells Fargo and the like, and said, quit selling your foreclosed properties for below market value, because that was what was driving the market down. I mean, every day I would go up. Bank of America is one of my large clients. I'd go out and tell them, hey, this is worth 300. It's a foreclosure. 2 weeks later, it's on the market at 250 because they want to get rid of it. They don't want it on their balance sheet, and that's understandable. But now at this point, I had a meeting with them. It was more than 2 years ago, where they stated that they're sitting on more shadow inventory in Virginia than, it's more than, they say, 10 years worth of homes if they wanted to sell them. And they're rented, and they're being sold to investors outside of the marketplace, outside of the multiple listing system, so they don't make any waves. And as soon as that started to happen, end of 11, beginning of 12, what do you know? Things stabilized.
and then they could slowly piece out of it.
Yep, that's
And
what's happening.
so they control inventory.
Mm-hmm.
They
They
didn't
ran
want
it down, they'll run it back up.
they were cannibalizing themselves, right, by
Sure.
selling inventory. Uh,
I mean, you
just
got an asset manager at Bank of America whose bonus is going to come when he gets that stack of files off of his desk. He doesn't care how much money he costs Bank of America. If he sold it cheap, it's individual achievement is what he's looking for.
yeah, yeah, no doubt about it. All right, well, Dan, listen, I appreciate you coming on and spending an hour or so with us, and I know everybody else does. My nugget from today was Dan saying, when you get anxious, just think about your other losers and how they weren't as big of a deal as you worried about. Well, that's my takeaway from today, but I appreciate it, Dan.
No problem. Another way to look at that is don't let your loser turning into something that you will remember.
Yes, they're stupid trades, and there's
Yeah.
no reason to remember them. But yeah, thanks
Anthony,
again.
I'm going
Go
to
ahead.
send you the I'm going to send you the chart definition I use for entries that can be used for pretty much any security. If you want to post, I don't know if anybody's interested in it, but it's something to look at.
Yeah, do that. I'll probably
Okay.
yeah, just email it to me, and then I'll share it with. What's it for? The bonds? It's bond
It's
market.
for the bonds, but I mean, you can put any security in there, and if you're looking for an entry, it kind of makes the entries crystal clear.
Perfect. Yeah, send that to me.
Okay.
Sounds good. Thanks again, Dan. Appreciate it.
Thanks. Yep. Talk
All
to you
right.
later. Bye.
All right, let me mute Dan and then just go over tomorrow, or not tomorrow, next week. Hold on, Dan. Let me mute you. Where the heck are you? Oh, there you are. There we go. I think tomorrow, next Tuesday rather, there's some interesting order flow clips that we have. We'll go over as part of next week's class, and then I'll upload them into that trading cabinet section. If you're newer to the Edge, I wouldn't watch those clips until you go through the corresponding group coaching session for them. But they're clips on, different instances. What's cool is my voiceover. George's too is on there. What we were thinking and doing real time. Next thing is, so that's probably next week. In a few weeks, we'll carve out some time. I'm not going to be here in a few weeks. I think the last week of May, which is that Memorial Day week. So we won't have a session. But after that, I want to interview Trevor and bring him on. I think you guys will like how the footprint came about and his story, and everything from trading to turning the footprint into market delta and stuff. So we'll kind of keep that on the calendar out there. Also, Woj will make another appearance as we go through the month. And then I want to do a attack like a P&F webinar and go over importance of rotations, and then maybe a volume imbalance. But we'll go through it week by week. Dave is not here now. Wait, hold on. That's going to end this session. We'll stop recording and then just talk about some things that are present.